The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 2nd, wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone now. It's definitely not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show started on a wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading down 37 points, trading out at 18,000. Almost even Steven. You've got the S&P down 9 points at 2102. NASDAQ Composite off 35 points, trading at 5118. Russell 2000 off 11, trading at 1166. Markets waiting for the Fed to release its statement, which is going to be in about 52 minutes, give or take out there. So there may not be too much for us to do during this hour. We'll do our best to try to go identify whether or not there's any tells in the marketplace. You know, much like if you were playing poker, Texas Hold'em as an example. Congratulations to Mr. Wynn, who won last night's or this morning's World Series of Poker out there. I don't know if you're a poker player. I used to play Texas Hold'em all the time. I did that to stay out of trouble back in the 90s. Loved the game. Watched it till fairly late on Tuesday, and then again last night. And at about 11 o'clock, my eyes could not stay open any longer. I went ahead and said, I'm just going to go ahead and tape it, and taped it. And then when I got up this morning, when the opened my eyes, 6-ish or before 6, and turned on the television, obviously the station that was on is the, ESPN, the station that I had shut the TV down. And lo and behold, they were still playing out there. In any event, let's go take a look. Let's go play this game out here and see if there are any tells in the market. There were certainly tells that were going on inside of that Texas Hold'em game. That's for sure. So with regard to are there any tells, I will tell you I've searched high and low the intraday charts, meaning 30, 10-minute, and so forth. The only real tell, it was out here yesterday, it's out here again today. We do have a 10-minute delay on this feed here for the Russell 2000. The only real tell that is out here is that inside the Russell 2000, on the short-term chart, 30-minute chart out here, we do have an A to B equals CD to the downside. Now, that completed yesterday. Let me go ahead and get my crosshair out here. We'll put it in the crosshair right here at 2:30 in the afternoon. As price was moving lower, that's when we saw that little hammer candle form. Now, that hammer candle formed right at the completion of that one-to-one price projection. That's really what the A to B equals CD tool is. You want to master that C to D leg in order to really be able to master this pattern or the Gartley buy and sell. Price went ahead and bounced up from there, and then really has traded sideways within a range up until just a few minutes ago when price started to move lower. Now let me just update this and make sure this pattern is live. It is. So at the same point yesterday, approximately, where price had been moving lower, doing less relative energy, made that A to B equals CD, we have price moving lower right into that area with less relative energy. So if there's a tell with regard to how the market is going to, and really we're looking at the Russell 2000, which is the weak link in the marketplace. If I were to go ahead, and I'll do that for you, to put up the ES, the YM, the NQ out here. In fact, let's take a look at the NQ because this one's acting poorly at this stage. This has been strength. I don't have any of those patterns here to show you, and that is really what is difficult with regard to trying to gauge, is there really a tell? There's no uniform tell. The only tell perhaps is coming from the Russell. Now, back to the Russell 2000, back to the ranch out here. And if we take a look at the rancher, the Jolly Rancher out there, do you like Jolly Ranchers? What is your favorite flavor? It seems like this is candy or sugar week out here. Of course, it has to be with Halloween. Mine, watermelon candies. Undoubtedly, watermelon candies. One of the best created pieces of sugar that is out there. Now, in the 2-hour chart, this is a great piece of sugar out here. 2-hour chart, if we go ahead and we update this, we can see even on the 2-hour time frame, price has been moving lower as well with less relative energy. Now, in this case here, the cavalry has not arrived. Does this pattern, or quite frankly, any pattern, mean a hill of beans? Whatever a hill of beans is supposed to mean, does it mean a hill of beans without a reversal signal? I would say the answer to that question is no. That is why you want to know your P's and Q's, but more importantly, your Japanese candlesticks, and more important than that, the ones that are really reversal patterns out here. Do we have that in play inside the Russell 2000? No, we do not. But we do know that price is pushing lower on the string in the week indice out here, and it does lost out of gas. There is some gas, obviously, though, in the other equity futures contracts. I cannot locate those same patterns for the most part. If we take a look at the ES Mini out here on its 2-hour time frame, we do see that it has been moving lower, less relative energy, still no bullish reversal signal out here. So just a slight glimpse. Is this a tradable? Is this what the market is going to do, kind of a glimpse out here? No, I don't really think so. Not when we know the possibilities of the underlying tone of the market, which is potentially to move lower through not next Tuesday, but the Tuesday beyond that, or the Monday beyond that. So that's what's going on in the markets right now. What else can we look at here for levels to pay attention to for support or resistance? You know, inside of the ES Mini, speaking of the S&P futures contract, is this the one I wanted to show? Probably was not. Is this the one I wanted to show? Probably is. Nah, I don't even want to go there. Nope, it's not. What I wanted to show you is not there. Let's just go here and take a look at the daily equity futures contracts. The last bastion of hope. We can see prices are below both daily and weekly TAS market profiles, with one exception, and that is the Dow. The Dow right now is trading right on its daily bottom of its box out here. I would tell you what that price level is. There we go. I will tell you because now I can see it. It's 17,886 out here. We're trading at 17,890 as we speak right now. If anything is going to hold this market up, it is Mr. and Mrs. Dow. It's trading right at support. But boy, there's no agreement by the other parties to that contract. Dow's off 57. S&P's down 12. Give us a call, folks. Please. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Dow's up off 63. S&P is down 12 points out there. Let's go take a look at some things that are moving on. We also have some requests that have come in. Again, you can always send me your requests at steve@tfnn.com. Obviously, give us a call at the station, 877-927-6648 inside the Tiger's Den. An instant message will do. So we have questions here. Sylvia, yesterday, had sent an email, was asking me about going long TLT. So let's go take a look here first at the 30-year Treasury. And the 30-year Treasury, yesterday when she sent the email, by the time that I got to it, yesterday's candle was looking like a hammer candle. Turned out to not be a hammer candle. You have to wait till these candles close. That does not mean that we have not seen a bottom inside of the 30-year Treasury. What it is that we know about the 30-year Treasury is, one, it was moving lower, doing with less relative energy. You and I have taken a look at that pattern on a different charting platform that I have. And so we know that that has been taking place, very much just like the Russell 2000. We'll see whether that was the tell or not when we see how the market responds, say around the 2:30, 3 o'clock time frame. But in this case here, the tell inside the 30-year Treasury was moving lower, doing less relative energy. The problem here with taking that long trade now, let me go ahead and put this other chart up on my screen because it's going to, well, actually, I think I could do it here. Give me a moment here to do it here. I know I can do it here. That doesn't sound really that great, but I know that I can. I know I can. We're going to put, no, that's not the line. Oh, I'll be a son of a gun. I would have thought that would have been it. Oh, maybe this one right here. There we go. There's the button. See that yellow dashed line? So that is the midpoint, right? The midpoint of this descending price channel. And the reason, Sylvia, this may be a bottom. It truly may be a bottom. But I'm a little uncomfortable with the fact that the last time we saw this major bottom, what was repelling price, believe it or not, wasn't a market profile. It was just simply the midpoint of that channel line out here. So you're just simply, and the question was, hey, TLT, regard to whether or not she should go along the TLT out here. And in order to, now if we were to go take a look at the TLT and see what's actually in here, you're going to see all types of maturing date for the bonds out here. So, you'll see some that are in there that are maturing in the next couple of years or maybe even months. So it's not like it has in any event. You just have to always take a look at what are the holdings inside those ETFs out here. Because shorter term maturing holdings within there are going to impact the direction of this versus longer term, right? So it's not just it's not like a true fixed in any event. If we take a look at the TLT, here's what we know about it. Prices run right up into resistance is the only read that we have on this by getting up to the bottom of its TAS market profile. That's 131.91. We're trading 131.88. If the 30-year Treasury gets past that midpoint, TLT is probably going to get all the way up to its point of control, which is around 132.65. That's not an exact mathematical expression of where it's really going to go, but I would say that is likely the move. If it is able to do that, the TLT then would move up to the 133.75. So back to the 30-year out here. So should you go long or not? With the Fed coming out with the releasing minutes at this stage here at 2 o'clock ish. No, and then seeing how traders trade for the next half hour out there. Usually it's a good hour before you have true clear direction. Not always, but true clear direction out there. There's absolutely no reason for you to get into this trade. If you're already in it to the long side, you'd be looking to place your stop probably underneath the actual low, the current low out here from just yesterday. If you see a close below that, I'd still want to refer back to the 30-year chart out here, but the 131.90, probably not a really good scene out there for being long the TLT. Nonetheless, 30-year Treasury shows a bottom. It's just getting up towards that midpoint, which has been a level that has acted as resistance, as you and I took a look at. We also have, that was for Sylvia. We've also got a couple of questions here for Rose, and Rose wants to take a look at Teva Pharmaceuticals. TEVA is the ticker symbol. Now, as we take a look at Teva, and Rose is looking for a long entry into this. Now, I know what Rose is looking at, just as you do out here, and that is the fact that it's gone. It wasn't. Let me just make sure. I thought I had bunches up on my chart and saw something different earlier. Must have been a different chart. So Ixnay to, maybe not. Maybe not. This is what Rose is looking at. If we come all the way up here from this little TD setup 9 count out here back on the trading day of, let's go see, what trading day was that? That was the trading day of July 13th. If we start doing our wave counts to the downside, back here when Teva Pharmaceuticals made a low on October 17th, it was a Stevie Wonder key of G bottom. So that may in fact be so that's a key date, 10/17 out here. You get one tick below that pattern in essence has failed. So now if we take a look at that trading session on October 17th, 11.2 million shares. Now you like to see swing points tested with lighter volume. Is that what happened? No. On Halloween, happy Halloween by the way, it was 27 million shares. Was that a trick or was that a treat? The treat would have been testing that swing point on light volume. The trick is maybe it's not done testing those lows. So my suggestion is be patient out here. At least let the October 31st swing point, preferably the low, 41.75, get tested with less than 27 million shares. I say even less than the trading volume on the day of October 17th of 11.2 million shares, and then feel free to go ahead and swing for the fences on Teva Pharmaceuticals. We can see also that the bottom of that daily profile has acted as resistance today. That is at 43.76 out there. If we take a look at PCRX, that's also another equity that Rose is looking at from a long trade standpoint. Here's what we can see with regard to this equity, and that looks like this has tested a swing point. Let's go see if it's actually gotten down to the bottom, to the low, and it most certainly has. Now, that was a high volume-ish type swing point from June the 30th, 3.1 million shares, and it was tested just yesterday with light volume. Half the share, 1.5 million shares out there. So you have a successful test of a swing point. You don't have any kind of bullish reversal signal. You had volume picking up, in essence, yesterday as it was moving lower. Not exactly what you like to see. You like to see the volume test that we received out here. But, geez, you sure like to see that volume accelerating to the downside, unless that's when buyers were stepping into this equity. And we're certainly not seeing that today out here, Teva Pharmaceuticals. Nonetheless, your back is up against the wall here. You would close out the trade if you were if your decision was to go long if this were to close below yesterday's low. What should you do out here? I would say that you want to make sure you time the market as well, right? These are individual stocks. I don't know. This is probably inside of the IBB. I don't know that to be the case, but I would take a look at that. See what sector of the market that stock is in. You get the stock right, but if the sector's behaving poorly, if the indices are behaving poorly, it's not that equities can't move higher. It's just that you've got some currents that are against you. But in that ticker symbol, PCRX, you do have a successful test of a swing point with lighter volume. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 52. Let's go to Don in Virginia. Don, thanks for calling. Thanks for holding. How are you this afternoon?
Great, Steve. So what do you think of, get your opinion on NTRS. I'm looking to make an entry. It looks good here. Looks like a good setup. I could looks good short-term and long-term to me.
Okay. Well, so let's go take a look at NTRS as a ticker symbol, folks. That's Northern Trust Corporation, financial entity out here. As we take a look at historically where it most recently topped and the patterns associated, price was moving higher back on June the 1st, moving higher, doing less relative energy out there. Moves lower into a bottom, just as the stock market did back on June 27th. So that says to us, okay, we know that it's certainly going to pay attention to what the stock market is doing. Makes a run from there, makes a seventh wave move up into this nice little reversal signal here, a key reversal candle that was on September 2nd, backs off, makes a retracement, and now is moving higher. Now, the reason to take a look at this, Don, is because we can clearly see these patterns out here, these reversal patterns, and I'm looking at this now, this potential A to B equals CD pattern that could be underway. Let's go see if the swing point, the trading session from September 1st, which had volume of 1.29 million shares, was passed with volume. Well, the trading session that it was passed was on October 5th, 1.7 million shares. We always like to see those swing points get taken out with volume. In the case of Northern Trust, it did not. That doesn't mean that it won't in the future, but we have not seen a high volume day, or a volume day, I should say, above that September 1st level that has taken out that swing point. That's going to be one of the keys that you're going to want to watch. That being said, today happens to be a brand new TAS market profile that formed. It's the nuance of this, Don, is that the little point of control is closer to the top of that box out there. And that says that it is really in the small trading range here where sellers have control of this market. And therefore, if you're looking to buy this, your entry point on this would be $71.12. You're trading right now at $71.97. If that price fails to hold as support, then we have to really take a look at probably the October 13th level and identify the volume as price would come back in that area, which is 68.78 to 70.35. So right now, I would say at least wait until this pulls back into that 71.12 level. Now, the reason that you want, then you can make your assessment reward to risk, because if this can get above that swing point from September 1st, do it with volume, then your price projection on this is going to be somewhere around 76 to 80. And I would go more towards the 80 side of this at this stage of the game. That's what the daily chart shows us.
Well, Steve, what was that swing point again?
What I'm looking at here is going to be that September 1st swing point, and that high there is 71.6. And the reason that I'm looking at that is, one, that also happened to be this nice little, we take a look at the potential wave counts that are inside any equity or what have you. In this case here, when it gets up to that seventh wave, you and I, we pay attention to that. That's the letter G on this chart here. So that identified just a normal place where the market ought to make some type of short intermediate term top, backs off, makes a very shallow retracement, and then moves beyond that swing point out there. That alone is a little bit bullish, but it did not take out that September 1st level with volume out here. And with that, and so then that says, hey, where can you and I go back to look for levels of support? With there being a brand new profile that formed today, and with the setup of that profile suggesting that is really sellers in control of this price area, and it's a narrow price area at 72.92 to 71.12, says go ahead, because you have studied this chart. So you're looking at, hey, where's a place for me to get into this chart? I would say it would be at that 71.12 level. If it fails there, then you've got to take a look at, or you should take a look at that October 13th area and make a determination whether or not price is moving down there with volume. Because if it is, it opens up the door for the swing point from September 29th again. That's what I see on the daily chart. What were you, because, I've looked at it for a good 2 minutes or so. Was there something else that you're looking at that I've overlooked?
No, I just like to look at the chart. I think it has a good setup.
It does. It does. There's no question that it does, and even from a long-term standpoint, you know, when I switch this to the weekly chart, I'm going to turn off those profiles now because they're just simply going to clutter our chart. And if we take a look at the weekly setup, the nice thing about this is all the way back in February of this year, this actually set up a nice little Gartley buy pattern. So this could have a whopping move to the upside long-term out here. So I do see what it is you're looking at. Now let's go see if what price has done. And it's hard to make a Gartley buy pattern on a weekly chart out here. When those patterns arrive, you certainly want to be able to find a way to take advantage of it. What we can also see out here on that weekly chart, though, is this little trend line. So we can see that price is really struggling at this weekly trend line. So with regard to Northern Trust, on a weekly chart, just simply from the high here of the week that began on July 20th, and then use as your next touch point the week that began May 30th, 2016. By the way, that was July 20th, 2015. You'll want to see this thing break above that trend line. And right now, it hasn't just yet. So wait for the pullback into one of those areas before you fire away.
Okay. And then, Steve, usually times like this, the market being jittery because of elections, I guess, and external things, I usually, don't like to play. What's your take on it? I mean, but then a lot of times I say, well, I have a good setup like this, but then I say to myself, well, the market's really jittery now, and maybe I should wait. But then a lot of times I wait, and then the price gets away from me. So, I mean, do you trade regardless if with the market? When I say the market, I mean S&P. What that's doing? If you have a good setup, you just go for it anyway, or?
Well, so you're asking me something different about the S&P versus like an individual stock like Northern Trust. So that would be different. Let me first try to give you my take, or what I think the chart's takes are on the jittery market, because you focused on that, and where you focus your energy, is where everything flows. So the first place that I would focus my energy with regard to the jitteriness, and to maybe answer your question, where's the market going? I take a look. I post this Dow chart up on my screen. This is the monthly chart of the Dow, and the red solid lines that are going across this horizontally are the horizontal trading ranges. Now, it just so happens that these levels here were really formed at the price levels of 12,318 and 10,422. Those had the largest number of points of contact. When I mean points of contact, I'm referring to an open or close of a monthly candle session out here. And as long as the 18,000 level holds inside of the Dow, it's a monthly chart, so it almost doesn't matter. The chart doesn't care that it's November 2nd. Right now, what we know is this area has originally been resistance. Price has broken above it. It's continued to test this level, including today, including yesterday. But, Don, as long as price remains above this, the Dow is headed to 18,951 and then 19,899. Do you want to stay on through the break? I can finish that thought and we can carry on our discussion.
Okay.
Okay. All right. So we'll go back to Don. We're going to try to answer his questions, because I guarantee you his questions are your questions. And I know that because they're my questions, too. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're on the line with Don in Virginia, and we're trying to look into both of our crystal balls out here and understand, in essence, what is the market doing so that we trade, in essence, in the direction of the market. We take a look at some individual equities. So Don, and are you able to see this chart on TigerTV or?
No, I'm just listening to the audio, Steve.
Got it. Okay. So if you get a chance, you can play the replay on this archive channel. Yep. Okay. You're going to see that price is hanging right at about this 18,000 level. Right now we're at 17,976. Should be at the end of the month. This should continue to be a good level of support. If it's not, and it fails to hold that support, price will head down to about the 17,056. So we know our parameters. If it holds that support, price will head to 18,951, maybe even 19,899. So the very first thing I like to do is step back and say, hey, what's going on longer term? So I don't get too caught up into a 200-point day to either the upside or the downside. Then the very next thing I like to understand is what is the seasonal, where are we at in the seasonal pattern of the market? You live in Virginia. You probably have a different set of clothes that you wear in January, February, or March than you do in July. Here in Florida, we pretty much wear the same thing year round. But, if you know what season you're in, you can plan better. We happen to be in, this is the annual seasonal cycle, we happen to be in that portion of the season where the market makes a bottom in October, typically around October 13th. That low, this is the Dow, by the way, that we're taking a look at, was taken out yesterday. Does that bother me? No. But we're in the favorable seasonal cycle where this is really where that Santa Claus rally begins. So that's a positive. Is there anything to make me believe that this chart here or that seasonal cycle is not going to begin again? And the answer is no, there's not. So then with regard to individual stocks like you're looking at, all of these points suggest to be looking, as you are, to something that looks good from the long side and let all of the noise get behind us. Now, you also happen to mention the jitteriness, and is this a result of simply an uncertain, from any side to take a look at it, political environment. And this chart here shows us if Hillary Rodham Clinton wins the White House, because it would be going from one Democrat to the next Democrat out here. Folks, this is nothing. I'm not talking about who I want to win. I'm talking about how you should take a look at the stock market behavior and what to plan for. If the office of the president goes from a Democrat to a Democrat, it says that the stock market should make a low, the Dow, right around November the 14th. It's November 2nd. You've got 12 days to go out here. Maybe you put off your decision until November 14th. And then if that occurs, you can see that it is, and I know you can't see because you're not watching it, but I will tell you it is one heck of a nice rally. So this is an excellent time to be able to have your gunpowder dry. If, on the other hand, and here's the problem with yesterday, if the office goes from a Democrat to a Republican, that would say here Donald Trump would win the office, the Dow should have formed a top between November 2nd and November 7th. What is today's date? November 2nd. And this can be off by a day or so. So now the markets are truly agnostic at this stage of the game, or they're not agnostic. They are not clear, the stock market, from a polling standpoint, to provide you or I with a piece of information with regard to who's going to win. So then I say, we don't really need to know that. We can wait until a week from tomorrow, or maybe it's a week from today, at midnight or whatever it might be, right? Because what we know is the stock market will behave differently, or should behave differently, depending upon who wins out there. And if it is a Trump win out here, the stock market should trade in a consolidation-oriented type range. And that says with regard to the S&P 500 and trading it, you would almost really want to be trading that as a swing trader, kind of an intraday. Maybe it's a 5-hour chart or a 2-hour chart or something like that out here. We're going to have another sideways move, or that will continue if we go into and it doesn't matter that it's Trump. Okay, Don. It's just simply whether it went from a Democrat to a Republican out here. Mm-hmm. So that is what the market patterns are saying. So if Hillary is the one to win, the markets are going to move higher. It's not going to happen on Election Day, or it shouldn't happen on Election Day, but we look for bottoming signals. Seasonal cycle says the markets move higher. Horizontal trading ranges says if 18,000 holds, the Dow moves higher out here. And those are the pieces of information that I think are the most relevant. This has been a trader versus an investor's paradise out here. And that's what I really try to identify for subscribers, are more of longer term trades out here than something where I've got to send out an update at 3 o'clock in the afternoon and maybe one at 11 in the morning or something like that. I hope that the ISPs get those delivered in time to get people in and out of a trade. Instead, I give those intraday signals in the morning when I send out the newsletter, and then I try to get them into maybe longer term trades, such as we went long the gold miners. And we did it in a relatively decent sized way. When I say larger than we normally would, back in early or the middle of October. And I had said 6 months prior to that, look for the next bottom in gold around October. Right now, it looks like that is the case. You can't just rest on your laurels. Like, I don't know what the Fed's going to come out with and what their next, what the market is going to do next out here. I do like the way gold is behaving. I like the way that the miners are behaving. I like gold in basically every currency, euros, yen, U.S. dollars out here. So all looks good, and I believe that we should be able to stay in this trade for a long time to come. Either way, we've got to stop in. This is a break even and worst case scenario. And that's just kind of how I look at, and I didn't hesitate on taking a trade in gold or the gold miners, even though the U.S. dollar index looked like it was headed to the moon out there. Which everybody was, because it was clear the U.S. dollar index was moving higher. But it just, the trade set up and I went for it. And so the same thing in your case there with regard to NTRS. I haven't been following this chart for a long period of time, and it looks like you have. I'm just trying to give you current information today that says, hey, this is pulling back. Here's a little box. This is where it probably ought to pull back to before you go ahead and you would fire away. So maybe from long sides, you want to wait to see what happens till after the election cycle, and then we see who wins. You can. I will tell you with conviction, if it is Hillary Clinton that wins out there, these markets, we should have one heck of a nice rally. And it's not necessarily because her. It didn't matter whether it was her. It just simply was going from one Democratic candidate to the next. That's what the charts say out there. I'll still fall back to the patterns inside the markets, and right now the patterns are suggesting the same thing could unfold.
Okay. Yeah, I see what you're saying, Steve. But it's always been a problem for me as a trader investor. I'm like you. I'm basically a technical person, analyst. But the fluff, the noise can make can trump. No pun intended. Can trump the the technical stuff.
Yeah, no question. No question. Hey, look, I will tell you yesterday, with the market moving lower that it did, and for subscribers this morning, I won't go through all of them, but I believe I gave them 3 charts, not anything that we've looked at, or at least a couple of them are not anything that we look at during the show out here. But they are signals. I have been mentioning, I've been looking for some type of divergent patterns to help us identify a low, because I don't know whether that low is going to come on the 14th or whether it was November 1st or November 2nd, or when I know that we're in that period where I need to keep my eyes glued to the chart patterns and not watch the television or what the other commentators are saying out there, and then just fire away. And as long as we use proper money management, we'll be in this game forever. And that's really what it's all about. Okay. All right.
Thanks, Steve.
Hey, my pleasure. Thanks so much for calling in. That was Don in Virginia. Hopefully Don helped you out there. Dow's off 55, S&P's down 12. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. I mentioned that as long as we use proper money management, that we will stay in this game forever, for a long time to come. Back in the 1980, 79 or 80, I recall. And as many of you know, I also happen to be a bean counter, so I can talk affectionately about those fellow bean counters of mine that are out there. And back in those days, we did have computer. We were actually pretty. I worked for not one of the big eight, because there's not Big 8 anymore, but one of the firms just kind of underneath them was a regional accounting firm. The reason I worked for them is I did not want to work in an audit department. I just, nothing against auditors. We need auditors out there. But for me, it was like putting a gun to my head. I just simply couldn't do that. But one of the things that I was asked to do for their investors was to develop a spreadsheet to determine the amount of risk that people should take on individual trades out there. And that's when we developed this 1% risk out here. And that's this spreadsheet right here. People have sent me emails, and I meant to get to this a while ago, saying, hey, I have a limited amount of capital, say 10,000 or so. The 1% risk, what should I do? Should I be? Because the normal thought is, geez, I ought to go ahead and only look at equities that are, $5 or less or $1 or less. The price of the equity, whether it's 1 share or it's 50 shares, is not going to impact the 1% game. That's the 1% game is all about how much are you going to risk. Right, it's going to be 1% of your working capital. That's in essence, even if you start with 10,000, you got to start somewhere, right? So with whatever it is you're going to start with, how much are you going to risk on a trade? And if it's 1% of that capital, that means I'm only going to risk 100%. Your next portion of that equation is, and the question that we should have studied is, hey, what is, if I get in here, how much of a risk should I be taking? How much per share should I look at for my stop management? Once you determine that, then you know exactly how many shares to buy. If you are trading something that has a $100 risk and your stop is going to be $50, you can buy 2 shares. Right? If it's going to be $5, you can buy 20 shares out there. Now, there's a couple of other rules you have to take into consideration. I don't want to belabor the point out here. But when you control your risk, and yes, your stops can get jumped, but it's not going to happen, 100% of the time, 50% of the time. It's not going to – well, of course, it depends on what it is you're trading as well out there. But for the most part, your stop is your stop. And that's what your risk is. If you are in a situation, for example, where you are winning 2 out of every 3 trades, and the 2 trades you win, you're making 2 to 1. You risk 50 cents, you're going to make a dollar 50 cents. You're going to make $1.50 on that type of a trade out here. You can look just 2 to 1, where you lose on. You're going to lose on every 3rd trade that you get out here. You're going to make money on every 2. You can just doing that, just simple math. After 51 trades, you can turn 10 grand into $16,000 out here. So as long as you use proper position sizing. Folks, I will tell you in markets, the most volatile markets, okay, many people think I need a tighter stop. Nothing could be further from the truth there. And in quiet markets, you need to use an appropriate stop as well. Tight stops are not going to work for you. What's going to happen is you're going to be right on the trade and wrong on the stop. Instead, just figure out the risk, 1% of your working capital, figure out what your stop should be, then divide your working capital by that amount, and you know exactly how many shares it is that you buy, and voila, it's done. Let it run. What you should be spending your time doing then is going out and finding the next trade. There's only 3 ways to grow a business that I know, and in the case of trading, the way that you grow your business is not by watching the trade that you just put on. It's going and fishing and hunting for the next trade, folks. So stay tuned. Our man David White, he's going to be up next. We've got the Fed and David releasing their statements. I'll see you on Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.